Hello everyone, welcome to my channel. It's Queen Michaels. Today we'll be taking a look at market overview for the next trading week, and I will be sharing with you those opportunities that are there in the market for the next trading week, and also give you guides based on the Elliot Wave on how to approach the next trading week based on the price movements that we have seen in the current trading week.
And I thought, wait a second, that's got to be a principle in life. What if I stopped looking for opportunities to make money in the markets?
The market's going to do something. Your job is not to fight it.
The market never ever runs away. It's always there.
That personal diary of trading will make you a much better trader than
I could be right about the direction, but wrong about the trade.
Don't focus on the monetary side.
Trying to make too much money on a trade is what I have seen killed every trader.
Your losses offer you some of the greatest insight you can find into your mistakes. Relax, learn the process.
Candlestick pattern trading is a freaking trap.
Don't be in a rush to become a millionaire.
Let the market tell you what the market wants to tell you.
All right, let's just dive straight into this one here, and I will be starting today with USDJPY. Okay, so I have a various reasons why I want to start this review or market overview video with this currency pair. I'm supposed to start with USDCAD, but I want to start with USDJPY because of my time. Okay, so I want to quickly do this as much as possible and also give you the full breakdown as easy as possible, so you guys can also get the full understanding of how this concept really works and how you can as well plan for the next trading week. All right, first for this one here was one of the currency pair we looked at over last trading week, and this is one of it. Okay, and okay, let me just go over to the comment section there, okay, or the community there, and then let's look at what we talked about over the last few okay, so this is one of the questions that I was gotten. Okay, so I was asked, hello sir, may I know how you used to have confirmation on this setup? Okay, so the question here is, how do I know when to take this trade? Okay, so this was the initial analysis which I did, okay, first, and I was also looking out for this. Okay, so after this impulse here, we had a 3-wave move here. So if you look at this on a different time frame, you're going to see that you have a very good bullish candle. Okay, on a different time frame. Okay, you're going to have a good bullish candle, and then you're going to have another red candle, which is the bearish one. Okay, so you're going to have another one here. You're looking at these from a weekly time frame. Okay, so you're going to have this. You're going to have the next bullish candle to complete that. Okay, so this gives me an idea that I have an impulse correction and then another impulse. Okay, so I have an A, B, C. All right, so this was also what we had here, and that was why I pointed out to everyone here that at the top right here is where we want to start looking for trading decisions. Okay, so then we had a wave 1 drop, wave 2 there. Okay, so you can see that nicely. Then we had a wave 3 here. So this was the point area of concentration when we know how to point out when the end of the wave is, or the wave is actually complete. Okay, this was also my unique answer here, because I oftentimes tell traders that you don't know what the market is going to do. Okay, so you want to look at the market the way the market presents itself to you, and you're going to make your decision based on the rules and the guidelines governing each setup. All right. Okay, so this was also my another analysis which I pointed out here, that I want to be seeing for a kind of structure like this. Okay, I know that what I want to be looking out for is to plan for a sort of flat pattern here, because this is a flat pattern. We have a leg, first impulse here, we have corrective wave here, and then so on, and then this was our wave B going below this previous point here. So it's either we were working out a running flat or an expanded flat. Okay, so when price broke through this point here, what you going to waiting for is going to be for a possibility for an expanded flat. Okay, for a running flat rather than an expanded flat. Okay, so what are the rules and the guidelines that governs my own kind of trade, okay, with this one here? Okay, so what I look out for is, I look out for the 127 extension of swing A to swing B. I look at the 127 extension, and this is oftentimes where I like to take my trade. Okay, so I like to take my trades in this zone, and here in this zone I oftentimes like to have my stop loss just maybe 5 pips or at most 10 pips above this 161.8. All right, if price goes above 161.8, I will be wrong with this analysis, and I can as well pack up. Okay, sometimes I've had it that price have gone through this point and then return back. Okay, so sometimes that puts traders in a position where they start to think that they should have adjusted their stop losses. Okay, so you don't want to be doing that consistently, because if you're doing that on your every trade, you're going to notice that you're not going to be having a very unique statistical result. Okay, so you want to be taking trades based on the rules, the guidelines, be specific in your stop losses, be specific in your targets. Okay, so for this kind of setup here, I would like to take my very first profit in my wave B area here. Okay, so it's going to be my target area first. I'm going to explain further also in the main chart there. Okay, so let's just go over to the main chart here, and this is the chart here, and then let's see how that turned out to be. All right, so we happy that so far the 127 extension is actually a good target area. All right, actually a good target area here, as you can see that area there, that price rejected some sort. If I go ahead, put up a line here, okay, and I switch to a different time frame, let's say the 4-hourly time frame. All right, we can see that we had a rejection here. So we had a rejection here of the zone here. Okay, so you can see closely. Let me just zoom in a little bit there so you can see nicely. So we had a rejection here. Let me just take out these indicators there. I don't want to be seeing indicators in my chart. Okay, so we have a nice rejection of that zone. You can see that extended, which is the 127 extension, is actually rejecting nicely. Okay, so we have our stop loss just above here. So from this point here, you're going to be looking at risk of 61 pips at max. We're going to be looking at 67 pips, and you're going to be looking at the profit target of 170 pips. Okay, so from these kind of trades here, you have a very good high or a very good risk to reward ratio, and also a very reduced risk. Okay, so here in this one here, I will still continue to ride this to the downside. Okay, and then continue this trend right here. So we have it that the max area, which I expect price not to go beyond, okay, is going to be 134.529. all right, I don't expect price to go below the, or beyond that point there. I'm just going to go ahead because this is my expected wave one. So if I go ahead, put up leveling such as this, I'm going to go over, switch to another time frame, and then share with you why I think, okay, on the larger scale, I am ready for a downtrend to resume. Okay, so this is also the level length here. Okay, for this one. All right, so we have a wave 3. All right, I did this before, so I'm going to just be quick with this. So we have our ABC. So these are AB, these are B, and these are C. So this is the possible end of this trend. If price would go beyond this point also, then I would really love to stay off the trend, because then I would understand that I could have been wrong with analysis, and then this trend is actually about to do something very different. All right, so price could move in the sideways over this period. Here's a price hits the zone, could move sideways until the next catalyst also steps into the market, and then move price in the direction where price ought to go or is expected to go, based on the new set of players that have set or come into the market to make that decision right there. Okay, so let's swap onto a different time frame. I want to stay on the daily first. I want to explain this on the daily first. This was also what I pointed out first in that previous analysis there, or illustration there, about the impulse, correction, and then impulse. So if you go changing time frames, you're going to see something very unique. Okay, so if we should go over to the internet and then browse, search something around USDJPY. Okay, JPY, you can go Google it. JPY at 135. Okay, so you're going to have lots of news coming in here. So I spoke about 135 here, but I wanted to see a reaction or some sort of confirmation around 135. Okay, let's look at 135, how 135 was feeling, okay, in the rush. Okay, we had that price also speed through 135 up to 139 area before then dropping back into the zone. All right, so having another rejection of 135, it's going to be a good area to start looking for some sell opportunities. But first, I want to start looking for bearish ones. Okay, there are various reasons why I want to start looking for bearish opportunities right from this point, but it's going to be a very shallow one, okay, because I have a 3-wave move here, and I understand that this was a very huge impulse to downside, okay, and then we have another corrective wave some sort here. So this is expected. I expect these to still further continue to the downside, okay. What could make price change, okay, in its setup, in the setup, or not continue to the downside, okay? Let's look at 4 bullish sides of the story here. Okay, so we have it that price did go to the 61.8 of this. So if this is going to respect this zone as a retracement of this drama, so if we are expected to have an impulse, a retracement or a correction, and then the next impulse will be to downside, then guys, you want to be more careful not to start arguing with the market. All right, that's why I pointed out to you first that I like to follow the rules and the guidelines governing every setup, every pattern, okay. Follow it diligently and then allow price to price you or score you in that analysis, okay. So here with this one here, I've set up a good risk, I've set up a good target, and I've set up a good trade here. So I would wait for this to hit my TP1 around the zone here, 131.92, and also my TP2 maybe somewhere around back 136.2. Also possibly could also continue, because I'm starting to have reasons to look at this as a downtrend. Possibly we could have been having some sort of waves calculation here, but I don't like to count smaller time frame waves because they're oftentimes most noisy. So I'll just look at the bigger scale and then make my assessment and also make my decision based on the concept, okay. Another pair I'm going to be looking at with you guys here is going to be USDCAD. Okay, I want to look at USDCAD. Next, I'm going to look at the USD Mexican peso, because these are trades I have seen a possible setup. Okay, one of the things I point out to traders is that there are points of randomness in the market. There are points we call points of randomness. Okay, at that point, things are happening in the market, but it doesn't really have a definite pattern. All right, what do I mean by definite patterns? We can be seeing price moving in some sort of directions or moving up from this point here, but without a definite pattern, you can't really step into taking a trading decision. All right, so we want to be seeing a definite pattern, and then we want to be taking a trades of that pattern right there. Let me point out to you guys with this one here, I think I have a definite pattern here. I'm going to just go ahead label this nicely for everyone here to understand what I'm looking out for. These are few patterns which are not in the textbook, and you want to just look at them. It occurs oftentimes again in the market. All right, it occurs oftentimes in the market. Price actions are generally visible in candlesticks, and that also reflects or gives you an idea of the general feeling or the general behavior of the market participants. Okay, many times when I actually do presentations such as this one here or market overview, I want to teach you guys more. Okay, I want to teach you guys more. I want to educate you guys more and more. All right, give you the full tip or the full breakdown of what Elliot Wave traders should be looking out for, okay, in terms of their trading. All right, so here I have a definite pattern here. What I'm looking at here is we had some sort of contraction or maybe end of wave structure. For those of you that actually love counting the waves, we could be having an end of wave structure, maybe end of wave here, 1, 2, 3, 4, 5. Okay, so we're gonna having 1, 2, 3, 4, then 5 down here, and then price break out. So for those of you that are looking out for ending diagonals, okay, so this is a breakout here, and for this kind of breakout here, I look at this as a W wave. Okay, I'm not going to look at this any differently because this is my own understanding of the market. All right, I'll look at this as a W wave. I've looked at this as an X wave, and I'll look at this as a possible formation of the Y leg. You can go over to my channel and then watch my previous videos which I made about the WXY combo combination. It will really help you a lot in also understanding better what I'm talking about with this example here. Okay, for a scenario such as this one here, you guys understand here that you want to be looking out for your very first target. Okay, and your very first target is going to be the 127 extension of the W to X swing. Okay, so this is going to be our first target here. So I'm going to go over to use my trend line or my line. Okay, I'm going to put up a horizontal line here marking the price area, and you know that the next target is going to be the 127 extension, which I have the overextended here, as you guys can see here. Okay, so let's look at here on a lower time frame here. how will we plan for price to head into that zone. Okay, so here is the best way to plan for price to head into that zone here, and this is a very unique one here. First, I want to show you something first. Okay, you don't know. Okay, sometimes in trading we can expect that price could actually form an ABC. Okay, price could actually fail and then form an ABCDE. So you don't know what price is going to form at any point in time, but you want to respect the rules and the guidelines governing each pattern. Okay, here I'm expecting that price have dropped first impulse here, next corrective wave here, the next impulse here. Whatever this is here, I think it has stayed too long. Okay, it has stayed too long that this could be a triangle about to form. Triangles oftentimes form in the fourth wave, the X leg, or the B wave. Okay, what do I say? Triangles oftentimes appear on the X wave, the B wave, or the wave 4 of the sequence. Okay, I've said this many times and I'll say this again because it will really help you as a trader in your development. Okay, so have that idea, and oftentimes whenever you see a triangle, all right, it oftentimes indicates possible end of wave. All right, possible end of wave. This is what happens here with triangles. It identifies or it shows you that the end is near, so to speak of. Okay, so after this very first drop here, you want to start packing your things, you want to start preparing, and then watching out for the next bullish opportunities. If it actually presents itself, you want to be hopping into that one and then continuing after this retracement here to the upside here. All right. Okay, so this is going to be a good one here. Let's look at here, also zoom in a little bit to look at this one here, how we should plan for this one here. Here, I'm starting to see some bit of sluggishness or sidewardness in the market here. And this could actually be one of the things that could also be in play or plan on happening. All right. I would first of all say I see a 3-wave move here. Okay, so I see an impulse, correction impulse here. And this could actually be the A wave which we're looking out for. Price could also drop back into this point to create a B wave. Okay, so once price moves back into the zone here again for the C wave, I will be ready to take another short opportunities and then put my stop loss somewhere above here and then waiting for whatever will happen to happen. All right, what I'm going to be doing, because I will be starting to expect a 5-wave move. Okay, if that would be the situation with this one here, if a 5-wave move could be in play, okay, for this one here, then we could look at end of wave, okay, or ending diagonals, some sort of structures like that, okay, and then plan for read. All right, so if you look at that, we could be planning end of wave and then diagonals such that we could be having an A, B, C, and you know that this is our D, and then maybe an E. Then we can expect another break to the upside. All right. I want to see that also happen before I can then step up to take a trade decision. Okay, I love it when those patterns appear over and over again. I love it when they appear, and I love it when I trade them because they oftentimes give me the highest reward or the highest possibility of good reward. Okay, so a similar one was what happened last week on AUDCHF. All right, let's look at the similar one here that happened. This kind of formation, this kind of patterns are oftentimes very good. Okay, you have this end of wave and you look at the next impulse to upside. Okay, so for those of you, I'm just going to take a quick share with you. For those of you looking at trading this one here, remember guys, I point out to you that the target is 38.2. So once we hit 38.2, we will likely want to hop off of this one. Okay, so similarly to what also we did over in the week on EURGBP, we hit the 38.2 and we hopped off the trade. Okay, we hopped off the trade. It was also a nice trade. You can see 38.2 here was also hit. The objective was hit. This was what we spoke about back in the channel. We spoke about this many times in the channel this week here. So the objective was hit and we were out of the trade here. So whatever pullback that is starting to happen here, I will not be overly concerned. But I think when next I'll be looking to trade a trade would be, we have an A. This is what I'm thinking is going on here, guys. I think we have an A, I think we have a B, we have a C, we have a D, and we have an E. So whatever is going to happen next, I'm going to be waiting for a retracement. Okay, I'm going to be waiting for a retracement up to 38.2, 61.8, somewhere around this zone. it's best to look out for the blank areas, okay, the untested areas. So this is going to be the whole of the blank areas here where you want to start looking for opportunities for the next bullish run to the upside, okay. That would be that for that one there. So we will move on to the next currency pair. Okay, I think I took out the wrong FIB tool. Okay, so we move on to the next currency pair. I will be doing a review on GBPJPY. Okay, so this is one of the things I want to share with you for those of you that actually have understood the Elliot Wave concept, or the concept of the Elliot Wave, how it works, really. Okay, so I will just throw a little bit of light into this one for you guys. Possibly you must have come across this pattern here and you need some clarity on it, or how you can trade it as well. Okay, I know this is very odd, but sometimes it happens. Okay, it sometimes happens because it is happening right now. We have a leading structure that created a wave A or wave 1. We started creating a wave 2, then we moved up 1, 2, 3, 4, 5 to create a wave 3. We moved into another consolidation here, which created some sort. We can put this, put this. We can having that wave 4 was complete here, and then wave 5 was complete here. Okay, so this is a very unique setup. Okay, it's a unique setup here, but after this extreme here, we've started to see that price did make a huge drop and a huge retracement. Okay, so this is where we're going to be putting our most concern right around. Okay, it's a very big question that whenever things like this happen, you want to switch one time frame higher. Okay, if possible, switch one time frame higher, maybe switch another time frame higher again to see what is a statement from a different time frame. Okay, what are we seeing, or what can we identify from a different time frame? Okay, so here on my analysis, this here could have been some sort of pattern here. So I would just like to check. Okay, I would like to make a check and then see. Okay, so we are at 127 extension, and that's why we started to see price rejecting that area. So you guys can understand that when you are using your Fibonacci tool, okay, you want to switch time frames. Okay, you want to see what happened in different time frames. So on a monthly scale, we've rejected once, rejected twice, rejected the third time on this 127 extension, and that was also in the month of July. All right, looking at this one here, how do we plan this one? Is there a chance? You need to ask yourself certain questions as a trader. What do you want to go? Where do you want to go? Okay, what's going to be your next move? Okay, here I didn't anticipate end of wave to come. Okay, maybe pull back, then we created some sort of corrective pattern here. Maybe price could have continued to the upside, but you guys know that after this kind of setup here, what you want to expect is going to be an ABC, some sort of formation after 5 wave. We want to be seeing a corrective wave. Okay, so you're looking at 1, 2, 3, 4, 5. Next one, what you want to start to expect is going to be an ABC correction. Sometimes it could be a zigzag. Sometimes it might be a triangle. All right, then we could be planning out for a W. Then if it's a triangle, I'll be looking at for an X, then to complete a Y. Okay, so these kind of things happen oftentimes in the market. All right, but for this example here that we've seen that price have broken previous areas here, previous highs here, this is one we should be very careful with. Okay, price should have dropped very good uniquely. Okay, I was looking at price to have dropped maybe somewhere here, dropped uniquely. Okay, and then formed VC wave. Okay, then I would push it back to maybe the zone here. Price started to create some sort of sluggish price formations here, which price could as well respect this point as a possible C. That I don't really know. Okay, because whatever we're doing forecast, we're doing analysis. All right, we are not sure of what the market is going to do. We are only planning for a trade, and then we're going to be trading that plan. All right, so we have some sort of triangle here, which could have been I don't know if this was complete or for a WXY. Okay, these are things I get to ask myself, because one, we did break out of the zone. Okay, we did break out of this corrective wave here, so this could have been an impulse A, B, C for a W, maybe an X there, then maybe a Y here. So this could have been complete. I don't know. So if this could have been a start of a new wave, this is the area I'm going to be overly concerned with. I'm going to be overly concerned with this area here, and I want to take trades with the right risk and the right reward. Okay, so here on this area here, this is one of the areas I'm going to be looking out for. I did label my chart like this, but if I go one time frame higher, you're going to see that we have a good impulse, we have a good correction, and we have a next impulse. If this setup here was expected to be a 3-week move of an ABC, okay, I like to draw out some scenarios here. So I would expecting that the next price movement should at least break above the previous point. All right, it should have, okay, for this to be correct, for this to be valid. All right, for this to be valid, you want to be seeing the C wave break above the extreme of the A wave, okay, for this to be valid. Okay, so rather we had an impulse correction, and the next impulse stayed around this point here before price dropped back one more time here. So whatever we are planning, or I'm going to be planning out for, a possibility that there could be still further uprises. Okay, I know first I should have taken a trade here for GBPJPY, okay, here, but as at that time I was still on a trade on EURGBP, so I didn't want to take a counter trend trade. I didn't want to be longing EURGBP, EG, and then longing GJ at the same time. So I did caution myself about this. So it's best to see where next price is going to go, okay, but it's a whole lot of big tussle around here, and we don't know, okay, what is going to happen next for this kind of price movements here. But it's best to see, okay, plan, and then wait for some sort of confirmation to be able to take that trade to the next level. Okay, it's a whole lot of big game right now, and it's one that you should be careful on how you play along with the market. All right. Overall, I don't really have some sort of valid confirmation at the moment. Okay, but price is still he has some sort of weakness here. So if price finds a new demand of the zone, I think that could push price to the next level. All right, it's something we don't know. All right, so nobody knows. Nobody knows what the market is going to do. Bill Gates doesn't know. Biden doesn't know. You know, nobody really knows. Okay, the market can actually do anything it wants to do, and I respect that, and I expect it to do so. All right. So let's take a look at the next one here. I want to be doing the USD Mexican peso. This is one of the examples I've been pointing out to traders oftentimes again, that the market will respect structures. All right. Let's look at the USD Mexican peso and what structure do we have here. I pointed out many times, I've made these examples many times in the market, and whenever you see this is oftentimes money. Don't miss it. A, B, C, D, E, and a fast move to the upside that created the W here, and then the X wave here, and then we can expect the Y leg here. This is going down to complete the Y leg. These are setups you don't need to miss. All right, these are setups you should not miss in the market. All right, it's a very simple setup. You don't need to miss this. You don't need to be ignorant about this. Make this your everyday trading setup. Look for this kind of setups. If they appear, it's money. All right, if they appear, it's money. Once they appear, it's money. All right, so your target is going to be the 127 extension. I already have my line drawn down, and I already got it in on this trade here, so it's a very good position here. I love to take the swing trades whenever opportunities like this present itself, and you know that possibly that this we are going to be writing this one up to risk 377 pips, and we're going to be writing this up to 1,700 pips. All right, so that's going to be a very good position. That's going to be a wonderful position here for whatever trades you want to be taking with this one here. Is going to be running fire. All right, so look for the next opportunities here to hop into the next opportunity and then write this to the downside as well. All right, so with this, I think we had some sort of correction here. I always like to point traders in the direction of the trend. Okay, if you hop in on a good trade, stay with the trend. Okay, the trend is your friend. You hop in on a good trade, you stay there. You ride the trend to the downside. Okay, so whatever you're looking for this kind of scenario here would be a corrective pattern. Once you find that, then hop down to this one. This also was a similar example I pointed out to you with CAD CHF back in the channel. All right, CAD CHF was also in a good position. All right, CAD was also good. And this was also the analysis here on my YouTube channel, so you can go watch it again. I just pointed out to you that if you're looking for a continuation of the trend to the downside, that should be after the 3-wave corrective pattern there, and that was what we saw. And if I go over to point out to you how that fade out, it was also a very profitable trade. It was also a good one to hop on to. All right, so looking at CAD, this is how it looks after that 3-week corrective pattern here. You can see it's a very good corrective pattern here, ABC, and then we can expect to ride whatever is happening here to the downside for a continuation of that trend. All right, so see you on the next video. I will be back with more educational videos in order to enlighten you and also educate you more about the Elliott Wave concept and how you can develop yourself and become a consistently profitable trader using this concept. All right, so see you on the next video. Please remember to give a thumbs up to this video and also subscribe to this channel if you want to learn for more. If you want to learn more, and you can follow us on Elliot Wave community and also share your experience about the Elliot Wave. I will be there to actually assist you and then give you one of those tips or one of my educational materials as well to help you in your journey into becoming a consistent, successful trader. See you on my next video.